Hey guys, how's it going? Lewis Harrigan here, and welcome back to my channel. And in today's video, I'm going to be analysing BAE Systems stock. I'm going to be using fundamental analysis to see if the company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So, who are BAE Systems? So, BAE Systems plc is a British multinational arms, security and aerospace company based in London. The company is the largest defence contractor in Europe and amongst the world's largest defence companies. It was ranked the third largest based on applicable 2017 revenues. So the largest operations are in the UK and the US, where BAE Systems is the sixth largest supplier to the US Department of Defence, and other major markets include Australia, India and Saudi Arabia. So the company was formed in 1999 when Marconi Systems and British Aerospace merged. And since the formation, it has made a number of acquisitions as well, and they are also listed on the London Stock Exchange and part of the FTSE 100 index. Now let's have a look at the sales breakdown for BAE Systems, and 34% made up of air, so I'm assuming this is aircraft, 23% was electronic systems, 18% was platform and services in the US, 16% was maritime and 9% was cyber and intelligence. So in terms of the regions, 48% of their sales are to the US, so that's a very large portion, 20% to the UK, 14% to Saudi Arabia, and the rest make up of many different countries. Now let's have a look at the income statement for BAE Systems, and this data has been taken from macro trends and all the data is in US dollars. So let's have a look at the revenue to start with, and so from 2016 to 2020 the revenue was increased ever so slightly, not by much. This is a really slow growing company and it's a very mature company, but thankfully, as you can see from the net income, they make consistent profits, which have been increasing year on year. 2019 was actually bigger than 2020, but the overall trend is up, which is obviously a good sign. Now onto the balance sheet, and let's have a look at the long-term debt to start with. So yeah, they were repaying it back up until 2019. But it looks like the pandemic has hit them hard because they've increased their long-term debt by a decent amount, which is obviously a bad sign, but this has happened to quite a few companies. Let's just hope it's not too much in the long-term debt to equity ratio later on. Common stock net is actually going down, which is a good sign, of course. Then returned earnings, accumulated deficit, so it looks like they've made a lot of losses. I'll have to look at this a little bit more in detail. I might have to pull up the annual report to really understand what the actual returned earnings figure is. Because the returned earnings figure is showing an accumulated deficit, but then the other shareholders' equity is showing it positive. So you'll have to have a look at the annual report to see what the crack is there. Now onto the cash flow statement, and let's have a look at the cash flow from operations and the capex, which ultimately determines free cash flow. And the cash flow from operations is up, it's down, up. So pretty inconsistent year on year. Although they are positive free cash flow, which is obviously a really good sign, thankfully the capex isn't too much, so they do generate constant free cash flow. But you just want to see this nice and consistent and going up alongside with inflation. It's just a little bit inconsistent from the numbers you can see here. Then let's have a look at the long-term debt. As we saw last time, these figures match basically the same. Debt was issued in 2020, so no surprise there. Then I like to look at the dividends, because I like to see the dividends paid over time going up, because this does impact our returns to shareholders, and yes, we can see the general trend is up, the dividends are going up over time, so great stuff. Now let's have a look at the key financial ratios, and start with the current ratio. It is above 1 ever so just, very much on the edge there. Long-term debt to capital or equity, it's above the 50%, literally only just. And in previous years, they've been very prudent with their debt. Looks like the pandemic has hit them hard, so we've had to, issue a decent amount of debt for the business. Hopefully this isn't an ongoing trend, because this will be a red flag for me personally. The margins are rather decent though, high gross margins, which is really good to see, and just consistent profit margins. Yeah, so not too bad. You want to see them closer to 8 and 7% rather than the 4 and 5 for previous years, but hopefully if we can keep these high, like their American counterparts. Return on equity is rather good though, 28, 18, 19, 27. That's a good sign for sure. So let's have a look at the analysis checklist and see what the numbers do pull out. Now onto the analysis checklist and BAE Systems, so based in the UK, market cap of 18 billion, current price as when I did the spreadsheet was like £5.56. And yeah, a PE ratio of 10, which is what initially attracted me to this stock in the first place. On to the first part and first pillar. So gross margins are very solid. Unfortunately, net margins don't quite meet the 10%, but this is okay if I do produce consistent profit margins, consistent profits and a consistent profit margin over time. But above 10% is preferred, of course. Return on equity above 15, yep, smashes that, which is really, really good to see. Long-term debt to equity, I've used the wrong figure there, haven't I? So yeah, that should be 50%, so it should be a red, but anyway, it doesn't matter. I'm not going to change that now. Current ratio above 1, yes, which is good. Proven ability to grow, so the revenue growth, net income growth and shareholder equity growth, it's all really good. Unfortunately, free cash flow growth is slightly down, but yeah, you have to research that more in the financial statements a bit more if you're looking at this stock. Great capital allocation, so we're looking at a company which repays its debts, grows its dividends, but unfortunately it has been increasing its shares ever so slightly. This is likely to do with employee stock options because it's such a low amount of shares. Good acquisitions, yeah, it looks like over time we've made decent acquisitions from what I can see from Wikipedia and Google. And buy at a fair price, so at the moment it's looking like a decent deal for BAE Systems. P ratio of 10, price to free cash flow of 12, and then the valuation showing a fair value of £6.20, which would be an 11% increase from the share price shown on here. So yeah, it's looking decent, but let's have a look at the DCF valuation to see where I get those figures from. Now onto the DCF valuation for BAE Systems, and using a required rate of return of 10% and using free cash flow figures taken from analyst estimates, I'm coming out with a share price of £6.20, and from the current share price it's looking fairly decent going forward. Alongside the dividends you're going to receive with this stock and the capital uplift, it's looking pretty attractive, to be fair. So definitely want to add to the watch list. That's what I'm going to do for sure. When free trade eventually add national declaration stocks, I will most likely be adding this to my portfolio, but we will have to see. I've already got Lockheed Martin in my portfolio, the biggest defence company in the world, as I do think that is the best defence company in the world for various reasons. But I might add this as a second position because with it being undervalued and another defence stock, which isn't going anywhere anytime soon, yeah, it might be one to add to the watch list for sure. So what are my thoughts on BAE Systems? So clearly from my analysis I can see that it is most likely undervalued based on discount free cash flow. So yeah, probably want to add to the watch list. A rate of 10% return is fairly decent, and you could potentially earn higher than that if the stock does drop lower. So definitely want to add to the watch list, do more research into it, work out what's going on in the defence space. I would assume that defence budgets are only going to increase, and with the US being the largest, sales partner of BAE Systems, or sales partner, what am I on about? Largest customer. The American defence budget is like 700 billion, so BAE Systems are going to get a decent amount of that. So very interesting for sure. And with a dividend of like 3-4% alongside your capital growth of, potentially 10% a year, not bad, not too bad at all. So the only thing with it though is ESG concerns, I suppose. They're not really a ethical company, I guess, selling guns and war tanks and aeroplanes and all that good stuff. So yeah, if you're not interested in defence companies, then obviously you're just going to put it in the bin. But if you're not too bothered about ESG and stuff, and you're comfortable owning the stock, then it might be one for your portfolio. I'm probably going to add it to my watch list. Like I said before, free trade don't have the option to buy this stock yet because of national declaration laws and stuff. They need to add that into the platform. But yeah, I'll add it to my watch list, and we will just have to see, won't we? It's good to see it being undervalued though. There's not many stocks undervalued at the moment, so yeah, great to see. So thank you very much for watching today's video. I really hope you enjoyed it, and if you want more, please subscribe to the channel, of course. And if you want more investing content, then subscribe to Patreon as well. Get exclusive access to me, exclusive content. I'm going to be putting a hell of a lot more content on there soon when I get some actual Patreon members, so please go there now, as it would really help me out. You'll get a Discord server, direct access to me, live streams, all of that good stuff. So I'm trying to build a community there. Give it some time, hopefully it builds up and you will get a value from me, because I like to think I give a decent amount of value in my videos. Thank you very much for watching, and if you like the video, please like and leave a comment, and like I said before, please subscribe. I'm trying to get 1,000 before the year, but we will have to see. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.